Hello, welcome to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and comment and refer this channel to your network so that YouTube pushes to a very high level of audience. In today's video, we shall discuss about entry errors, attractive forces, and Forex synthetic market. You see, you as a low capital trader or as a trader that have limited capital, like capital ranging from $1,000 to $100,000, and you are coming to the Forex market, you have a low capital. And so your entry must have no error. Your entry must be sniper. You have to learn how to get it. So by studying the attractive forces and eliminating them, you'll be able to get sniper entry. And right here, you have to learn this. If you are a big equity trader, like you have a big capital, like up from $1 million and above, you can decide to open a position without a stop loss, and then when the market goes against you, you believe in time it will go for your favor, it will go in your favor. It's still risky, but it does happen. So but when you are a low capital trader, you have to learn this that errors occur and you need to eliminate them for you to succeed, because you don't want to place a trade and your stop loss will be hitting. I'll start by this illustration. You see what I drew here? The blue line represents your entry price, where you enter the market. The red represents the stop loss, and the green line represents where you're supposed to have entered, like the actual entry price. But this actual entry price is very, very hard to detect, so you did not enter at that price. So you entered on the blue price, which is erroneous price. So when you do that, the market will pull back, hit your stop loss, and go to the actual entry price and start going in your favor. So we're gonna use moving average to study this attractive forces and how to eliminate it and get sniper entry. Okay, let's go for practical right here. Jump 50 index. This is jump 50 index. Let's try to get it right in the daily time frame. You see, in the daily time frame, we can predict a buy market here, but let's step to 15 minutes time frame and see if we can succeed buying this market, and how many ways can we succeed, and in how many ways can the attractive force be eliminated. Okay, so at least if we can eliminate the attractive forces, we can succeed basically. So that's what we want to do. We have to detect it, eliminate it, get sniper entry and make a profit. We shall be using the moving average for attractive force detection and elimination. So right here, this rectangular slab shows the region on the chart where there is probability of getting a buy. So there is probability of getting a buy here. There's probability of getting a buy within this session. But look at the problem here. If you take a buy here within this period of time, the market will go against you first. Okay, the market will go against you first. Okay, so there is a downward attractive force that attracts the price to the downside. Why? Because of the red. This red is still selling, so it's telling you that the market is going to go down. So it's attractive force. There is attractive forces at the lower section of the price chart. now. So you shouldn't take a buy. Yes, even though there is probability, you shouldn't take a buy. What of here? Can't we buy here? Now, even though price is acting above the red moving average, you shouldn't buy here. Why? Because if you go to some higher time frame, you know that the market cycle hasn't completed at our. If you have been losing money up to this time, try to get our 𝒓𝒂𝒂𝒅𝒆 course, which is WINFXTRADING or 𝒂𝒊𝒂𝒂𝒅 Infinity Profitable Strategy course. Make sure you get it. It's selling at $500 at this period, but in future it's gonna go as high as $1,500. So you have to get it right now that the price is cheap, so that you stop losing. Okay, so let's continue. So if you are taking a buy here, you lose because the cycle hasn't completed. The market have to pull back because this is a sell, so it have to pull back and sell again. It took this low, so when this sell cycle completes, then we expect a pullback. So you know that this pullback will be a new trend because the cycle has been completed. Okay, because market have 3 cycles: impulse, pullback, then another impulse. So this is this one will be a new trend definitely, but for we to get that new trend to be reasonably accurate, what are we going to do? We need attractive forces to be eliminated. So when the market break out of the loop, moving average loop, then we expect price to be attracted to the loop. So when this attractive force, because we need to believe it, so there is attractive force between here and here, so then we need to physically realize it by seeing candlestick print towards there. So we have this. The multiple times price came here and create support, so we have to enter this session because we have detected the attractive force and we have eliminated it by patiently waiting for price to mitigate them to, get it realized in physically. And so you enter this trade here, this sniper entry, and what's happened the market fly. I'll be ending this video. Thank you and bye for now.